What's up, traders? I'm Hotshot. This channel and video is for entertainment and my own learning purposes only. This is not financial or trading advice. I am not a licensed financial advisor. Please trade at your own risk. That being said, I really appreciate you taking time out of your day to watch my video. And if you are already subscribed to my channel, thank you for your support. Y'all truly do make my days better. If you're not subscribed yet, hopefully we can earn your subscription at the end of this video. But in this video, I'm going to show you the easiest way to understand daily bias and the easiest way to know what's your next draw on liquidity. Is it that previous day's high or that previous day's low? Um, Easiest way to understand this: expansion, retracement, reversal, or consolidation. If we just kind of go back right here in Euro USD on the daily time frame, you can see right here. Usually when our price breaks a low where it takes out like a high, that's usually like an expansion, or it could be like a run on liquidity. It's pretty much a run on liquidity, but oftentimes that's an expansion. If you see a good expansion, then it can go into like consolidation. Consolidation is whenever it moves sideways, and then retracement is whenever it moves back into the expansion range. So like for example, like right here, you can see that it broke this area right here, retraced, expansion, retracement, expansion, and then it gave a potential reversal right here where it reversed up, retracement, and then it expanded, but it failed to make a higher high right here. Reversal, retracement. Let me just grab this too. So we got failed higher high right here, reversal, retracement, expansion, and then we got this internal play within this whole um, expansion range. So that can happen. And then we have the expansion where it takes out this low, expansion, retracement, expansion, reversal, retracement, failed high, reversal. And so once you kind of see like what it's doing, like retracement, expansion, failed lower low, reversal, retracement, expansion, retracement, expansion, retracement, expansion, retracement, expansion, retracement, failed high, reversal, but it didn't keep a retracement. It reversed again, retracement, expansion, retracement, expansion, reversal. So a reversal can come on a failed lower low, like right here. It failed to break this low, reversal. And then right here as well, it can also come from just an immediate higher high. It doesn't have to fail. You know, if it would have held a higher low, came up and then failed, but instead it just reversed. And that is an ICT breaker block pattern. You can see right here if you had your that price tapped into it and it fell away beautifully. And then right here, you can see the same thing. There was the retracement, expansion, reversal, and then it reversed again because it broke through this low right here. Boom, reversal, and then it reversed one more time. So this was considered a consolidation. It didn't know which way it wanted to go. Then it expanded, retracement, expansion. So like once you know what you're in technically, like are you in a retracement, an expansion, which ICT price says is spooling, which ICT says price is spooling. So like whenever it's spooling, that's the best time to actually go in and hunt the previous day's high or previous day's low. For example, right here, here's your reversal, retracement, and then it began expanding from here, right? Once it began expanding from this point, once it creates this three candle swing, whenever I'm talking about a three candle swing, look like this. Between these three candles right here, you can see that this wick is higher than both of those wicks are higher than this wick right here that I'm circling. This green candles and this black candles wicks are both higher than this one. Okay. So that creates a swing low pattern right there. And then vice versa. Right here between these three candles creates a swing high right here. That's a swing high. This is a swing low. And you can just see them right here. Swing low, comes up, creates a swing high up here. Now, from my back testing, whenever they're equal lows, like here, this candle would then become the swing candle because it's between this one, and this one now. This is the three candle swing low pattern. So whenever it retraces and then it creates that swing low, like say that it retraces and it's going to continue going for longs. Once it retraces, it creates that three candle swing low. At that point, you can anticipate price to take out the previous day's highs, like right here. So this candle closed, created the three candle swing low. So this day you can anticipate this high to be taken out, and you can see that it did that. And this right here is where you can use ICT's power of three, where it would be where you would see price the next day would open, Judah swing down, create that fake move manipulation and accumulate longs to then expand, take out this previous day's high. Let me use this instead. This is better. Take out that previous day's high right here. Boom. And then just distribute out of their long positions. And then you can see where they close. And again, right here. Previous day's high got taken out right there as well. And down. See that it opened up down here, Judah swing manipulated, accumulated longs, expanded, took out, and just so you guys know which candle I'm talking about this one, this current one right here. You can see that it opened, Judah swing, manipulation move, accumulated longs, expanded, and distributed out of those longs and closed up here. The next day we can go in anticipating that price is going to take out this previous day's high again. Okay, so price will open. You can see that a Judah swing manipulated down, potentially went up, and it didn't take out that previous day's high. It could have been a target, but it also didn't take out the previous day's low. Let's see what the next day did. Took out the lows down here, which at that point, prices, at that point, I would go neutral on my bias until something like that happened. Because if you notice, there's this big swing right here. This is a lot of liquidity right here. And you can see we were very close to it. There was a very low chance of price moving away from it. Whenever we were so close to it, price likes to gravitate toward liquidity, as ICT says. So you can see that it takes out that liquidity, takes out those highs, previous day's high as well. And at that point, you can also anticipate maybe another takeout of the high until the swing high, three candle swing high closes, and then you can start anticipating price to take out the previous day's lows. Okay. So we got, see, instead it made a three candle swing high here, and then we anticipated the lows to get taken out, like right here, and right here. Three candle swing low created now. Now we can anticipate the swing highs to get taken out here. Let's see. There it is. Another swing high gets taken out, maybe. There it is. That's how we anticipate with power of three. Let's see. Okay, maybe it took it out, but maybe a potential three candle swing high. There it is. Now we could potentially see this low get taken out. Three candle swing low is actually created. Now we could potentially see this previous day's high get taken out. So it took out the low and it took out the high as well, if you notice that. It took it out just a little bit, but our previous day's high was taken out. It's It created the swing low here, potentially create another low. There's another low, so now we can anticipate the previous day's high to get taken out. Boom. There it is. Now we can anticipate this previous day's high to get taken out. Boom. Now we can anticipate this previous day's high to get taken out, especially because we're getting very close to this liquidity right here. You notice. It took it out, also took out the low down here too, which is no problem at all. But maybe we can see this high get taken out again. The previous day's high here get taken out because it's very close to the overall liquidity here. Let's see. Beautiful. It took it all out and the previous day's low didn't even get touched. So that's how you would kind of get a good daily bias on in your next draw on liquidity. So like for your ICT optimal trade entry, you could be targeting that previous day high, previous day low, or really for any strategy in general, you could be targeting that previous day's high, previous day's low, especially if you incorporate that power of three ICT concept with the Judas swing manipulation move, where price either accumulates longs or shorts to then expand and target that previous day's high or that previous day's low to then distribute out of their longs or shorts. And then yeah, there's many different ways to incorporate this, but I hope this video provided you some value. So far, a lot of you will probably be like, it's easy to do it in hindsight. Let me go ahead and just show you really quick a little bit of back tests. I don't want to make this video too long, but I already know what the comments are going to say. So let's just see right here. So at this very point in time, you can see that price has expanded, took out the highs. We can expect price to then take out this high right here. Okay. There it did that. And you can see that it created a swing low right here. So now we can see price take out this high here too. Again, I have no idea what price is going to do. Stood within, so it's very likely that price can still take out this high as well. But at the same time, it did create a swing high right here. So it's very likely that it could also take out the swing low too. So you could have a draw on liquidity on both. It's very, very likely, you know what I mean? You could. And it's okay if you do, you know what I mean? At this point, if we incorporate like expansion and retracement and all that, you can see right here, this is the expansion, retracement, expansion, retracement, and here's a big expansion. So it could potentially start retracing, okay? So we could potentially just see this low get taken out and this high hold. Let's see what happens though. No, it goes even higher. So, and that's what it did. It took out the previous day's high and the other day's high. And now it created all of these up candles. If you notice that it's all up candle wicks right here, giving you good decision making as far as your next draw on liquidity. It's very likely that it will draw to that previous day's high. You can see that it's still creating those upward wicks. Boom. And you can see it's still creating those upper wicks. The wicks are still being held. Maybe we can see it run through this again. Still creating the upper wicks. Maybe it can run through this previous day's high as well as this previous day's high. Nope, instead it turns around. You can see that it did create the swing high right here. So we could have anticipated it taking out that low as well. It took out that low. Now we could potentially see it take out this low right here. Okay, and that's okay. Potentially see it take out this low as well as that low. And it does that. Boom. Now we could potentially see it take out this low. Boom. Does just that. Now we could potentially see it take out this low. Okay, it created a 3 candle swing low. Now we could potentially see it take out this high. Boom, it does just that. Now we could potentially see it take out this high. Okay, creates a 3 candle swing high, but there is relative equal highs right here. Let's see if it takes it out. We could also potentially see it take out this low right here. So whatever intraday price wants to do, whichever way it starts displacing toward, that's your next draw on liquidity. So let's see. It takes out the low right here. And now we could potentially see this low get taken out as well. Did it take out liquidity? It took out a little bit of liquidity there. You can see that it takes out that low as well. We could potentially see this one get taken out too. Takes it out as well. We could potentially see this one get taken out too. We've seen this high get taken out as well. So like whenever it takes out both sides, ICT says that usually it's clearing liquidity on both sides for a potential expansion move. So potentially it could start expanding up. Created a swing low right there. So potentially we could see it take out this high and this high. And that's what it does. I hope this video was valuable, you guys. If you guys enjoyed it, please drop a like on this video. I believe that there was a lot of value in this video. Again, I'm not a financial advisor. This is just how I approach trading, especially daily bias. If you guys did like the video, again, drop a like on the video for that YouTube algorithm. It helps the channel grow so much, and I really do appreciate it. And if you guys aren't subscribed, hopefully we earn your subscription with this video. Comment if you want to see more like this. But until next time, we'll see you guys later.